Welcome friends to my new video which is about today's mortgage rates. Rates are something inching down. So today the average rate on a 30-year fixed mortgage is 5.66% according to bankrate.com, while the average rate on a 15-year mortgage is 4.90%, and on a 30-year jumbo mortgage the average rate is 5.53%, and the average rate on a 5-1 ARM is 4.27%. I will explain a little more about all types of rates. First of all, 30-year fixed mortgage interest rates. Today the average rate for the benchmark 30-year fixed mortgage fell to 5.66% from 5.9% yesterday. At this time last week the 30-year fixed was 5.9% and the 52-week low is 3%. The APR on a 30-year fixed is 5.67%. This time last week it was 5.92%. APR is the all-in cost of your loan. At an interest rate of 5.6%, a 30-year fixed mortgage would cost $578 per month in principal, and interest means taxes and fees not included per $100,000 according to the advisor and mortgage calculator. You would pay approximately $108,033 in total interest over the life of the loan. In case of 15-year mortgage interest rates, the average interest rate on the 15-year fixed mortgage is 4.9%, and the same time last week the 15-year fixed rate mortgage was 5.14%, and today's rate is higher than the 52-week low of 2.28%. The APR on a 15-year fixed is 4.93%, and this time last week it was 5.17%. With an interest rate of 4.9%, you would pay $786 per month in principal and interest for every $100,000 borrowed. Over the life of the loan, you would pay $41,407 in total interest. In case of jumbo market rates, the average interest rate on the 30-year fixed rate jumbo mortgage is 5.53%. Last week, the average rate was 5.79%. The 30-year fixed rate on a jumbo mortgage is currently higher than the 52-week low of 3.03%. Borrowers with a 30-year fixed rate jumbo mortgage with today's interest rate of 5.53% will pay $570 per month in principal and interest per $100,000. That means that on a $750,000 loan, the monthly principal and interest payment would be around $4,273, and you would pay roughly $788,116 in total interest over the life of the loan. 5-1 adjustable rate mortgage rates. On a 5-1 ARM, the average rate fell to 4.27% from 4.29% yesterday. The average rate was 4.29% last week, and today's rate is currently lower than the 52-week high of 4.32%. Borrowers with a 5-1 ARM of $100,000 with today's interest rate of 4.27% will pay $493 per month in principal and interest. Next is calculating mortgage payments. When we are coming to calculating the mortgage payments, Mortgages and mortgage lenders are often a necessary part of purchasing a home, but it can be difficult to understand what you are paying for and what you can actually afford. Using a mortgage calculator can help you to estimate your interest rate, purchase price, down payment, and other expenses. Here's what you will need in order to calculate your monthly mortgage payment. Number 1, home price. Number 2, down payment amount. Number 3, interest rate. Number 4, loan term. And number 5, taxes, insurance, and any HOA fees. How much house can I afford? This is another question. How much the house you can afford depends on a number of factors, including your income and debt. Here are a few basic factors that go into what you can afford: your income, your debt to income ratio or DTI, your down payment, and your credit score. Next is explaining the annual percentage rate. Annual percentage rate or APR takes into account interest, fees, and time. It's the total cost of your loan and includes both the loan's interest rate and its finance charges. Since APR includes both the interest rate and certain fees which are associated with the home loan, APR can help you to understand the total cost of a mortgage if you keep it for the entire term. The APR will usually be higher than the interest rate, but there are exceptions. I hope that you will like my video. Then it is requested to please subscribe to my channel. Thank you so much.